The insurance industry has been set up specifically to protect against that 1% chance that something catastrophic goes wrong. That's why American families use and need insurance, is to protect against that and to guarantee that all of those bills get paid. And I'll just highlight two mechanisms that are inherent in the insurance industry that protect against that. One is access to what's called reinsurance contracts, and the second is regulatory oversight and guarantees. Okay, so we'll take each one of those in turn. Number one, reinsurance contracts. So just to do a quick explainer one-on-one on what this is, imagine your family is on an insurance plan and there's a $5,000 deductible and you have $1 million claim. Say it's a NICU baby. You pay $5,000 and then your insurance pays the rest of it, right? Up to $1 million. What you don't see on the back end is your insurance pays $1 million claim, and then they probably have access to a reinsurance contract, and it's exactly like your contract. It's just their deductible is much, much higher, say $300,000. So your insurance company gets reimbursed for the balance there, $700,000, so that their exposure is limited to that $300,000 claim. That's important because any industry, anybody that's in the business of flattening out risk wants to flatten out their own risks. The way the insurance companies do it is access to reinsurance contracts. The way the healthcare sharing ministry plans do it is just by putting limits in place. So Cameron, you mentioned the NICU baby. A lot of these all the healthcare sharing ministry plans that I'm aware of have annual and lifetime limits. Some of them have specific limits for stuff like prenatal care or labor and delivery charges. It might be like $100,000 that, again, it's okay most of the time. Average pregnancy, labor and delivery cost, but you'd know better than I would, but what, $10,000 to $20,000, maybe $30,000. And that would, I think, include by cesarean section.
Yep.
But NICU, you could be looking at a $500,000, $2 million claim. Okay. So it's very important that like $100,000 limit on that policies actually could be a big deal if you wind up having a NICU baby. Reinsurance is one of the ways that the insurance industry addresses that guarantee. The second is actual regulatory oversight and guarantees of payment. Again, not saying regulation is good or bad per se, but it's a facts and circumstances analysis. But in this situation, I think it is important that we have some consumer protections. Somebody looking over the shoulder of the insurance company and saying, do you have sufficient capital to pay your claims that are coming in? Or are you just trying to get by and maximize profits and put out a cheap product to sell and to have more volume, right? Because that could put your consumers at a very financially risky space. So that's the number one step, is that financial oversight, making sure that experts are in the background, double checking all of your work and ensuring that you've got adequate capital. And then the second piece that kind of goes hand in glove with that oversight is actual regulatory guarantees. So every state, just a quick overview of the regulatory framework we're talking about. Affordable Care Act is at the federal level, and it sort of sets the bar, the minimum for what every insurance product has to offer. And then every state has their own Department of Insurance that regulates insurers in that state. And every state has a guarantee fund so that if you are, as an insurance company, selling insurance products to residents of that state, the state will guarantee payment of their medical bills if you, as the insurance company, declare bankruptcy or something goes wrong. That's extremely important for families, especially those facing high medical bills. So these, again, just bringing it back to the analogy, these are the guarantees and safeguards that we have in place to protect against that 1% chance that the parachute fails, something goes catastrophically wrong. Even in the insurance industry, we've got guarantees to protect against all of that. Whereas if you're in an unregulated industry, you kind of just have to be aware of those risks and either willing to take them or have a backup plan to sort of protect yourself in place.
Yeah. And I want to just want to speak to like just one real quick on that pro-life piece. Cause I know, Bob and I, founded this company, and really just to say one thing on that, like we as Christians, it is imperative for us to build these organizations to preserve those religious liberties, whether it's in the insurance or the health share space. Like this is something that's very vital. And I think we've been behind in doing this. It's kind of taken some time, but you can see, we saw it through COVID. You can see how like the medical field is very, very important to have influence over. as Christians to make sure that like our values aren't getting pushed out and we're not being controlled by governments or insurance companies who don't respect our values and beliefs. So like go back to what Bob said as these health shares, it's vital to have that unregulated piece that preserves that liberties. I think it's also vital to have the regulated piece. And this is something like all of us should be working towards to make sure that's the case. So
yep. Yeah, I think it's good, but like a good point. It just like backing up to the 1% like catastrophic risk, you've got and I always want to like caveat like the well-run health shares. I've represented some of them in past life from like kind of a sales perspective, helping folks get signed up for them if it's a good fit for them. The ones that are well run, like, they have these caps in place, from my understanding, right? Because if they didn't have a cap on maternity, they would be just a birthing baby program, right? And so, that's like one of the concerns maybe they have. Or if they didn't have a cap on, certain procedures, in certain benefits, you have folks who maybe like Jerry knows he's got a bad hip. He's had a bad hip for a decade, but he's never had it treated. So it's never going to show up as a pre-existing exclusion. He's going to slide through. Now, I guess technically he lied about it, but like, he's going to slide through depending on how the guidelines are written. Like, you now have a hip replacement. And so, you've got this structure in place to prevent, folks from coming on knowing that they need, you're trying to make sure that you have really healthy people on these health shares, right? But I think one of the things that is interesting that they do, they all have different names for it. I call it kind of like an internal like GoFundMe. But when you make your monthly share payment or premium payment, like you can also pay extra, or you can round up to pay extra every month or on a one-off basis to basically a bucket of funds that pays for these types of things. And a lot of these sharing ministries have like a pretty good track record of paying for the $1 million NICU baby when that did happen, even though, even now it's kind of a funky process, right? Like, it's got to go through this like separate committee that reviews it and decides to like put those funds towards it. But a lot of them will kind of celebrate the fact that like, they've always paid, those bills, even though they're not technically eligible for sharing out of this like, extra bucket of funds. And so I don't want to use like the actual names because I don't want to, call out any sort of ministry. But like, I would say too, like, they're not regulated, so they can't have an official program for that. But like, they're doing everything in their means, like in a unregulated, non-insurance way to, make sure those bills are paid. So like, there is some like beauty in that too that I think is interesting if it aligns with someone.